Hi, this is John Camarianos. Welcome to a new edition of Capital Considered, coming to you late summer from coastal Delaware. And so since I'm in Delaware, I wanted to do an edition on some of the benefits of retiring in Delaware, namely the tax benefits. There's a number of them. First of all, there's no sales tax in Delaware. That's a big benefit right off the bat. Second of all, Social Security is not taxed in Delaware. That's another significant tax benefit if you're a retiree contemplating where you should retire. Third benefit related to that is IRA and 401k distributions are not taxed if you're over 60 years old, up to $12,500 per year. So if you're a couple and each of you has sizable 401ks, IRAs, that's a $25,000 per year exemption per couple with regard to IRA and 401k distributions. The first $25,000 is not taxed. Income taxes in Delaware on a graduated scale, 2.2% to 6.6%. So that's kind of moderate. It's not a no income tax state the way Florida and Texas, for example, are, but those retirement account benefits and the Social Security benefit are significant. Property taxes, let's go over that. If you're in coastal Delaware, most of coastal Delaware is in Sussex County. Property taxes in Delaware are assessed by the counties, and your property tax rate is around 0.28 to 0.48%, depending on what your education taxes are. So that's also rather low if you own residential property in Delaware. Last benefit is on your income tax. If you're over 60, your standard deduction also goes up by $2,500. So a number of significant tax benefits to retiring in Delaware. Many of them kick in after 60 years old. I would just highlight two. Again, Social Security not taxed at the state level, and the IRA distributions up to $12,500 per person, not taxed over 60 years old. So John Camarianos for Capital Considered from coastal Delaware in late August. Thanks for watching. Hope you found this informative.
No information on this podcast should be construed as investment, tax, or legal advice. This podcast is not an offer for advisory services or to buy or sell securities. Before making any financial decisions, consult with a qualified professional advisor who can assess your individual needs and circumstances. Past performance is not indicative of future results, and all investments carry risks, including the potential loss of principal. Securities discussed in this podcast may be holdings of the host or his clients.